And when you look at the overall market implication here, we were talking about the potential for a prolonged conflict. And of course, that would raise a number of questions for the markets. It has the potential to draw in Iran. It has the potential to also perhaps halt the ongoing Saudi-Israeli normalization process. And of course, this also presents a significant risk to the global energy markets as well if Iran ends up being drawn into what could be a broader conflict. So what are you looking out for next?
Yeah, so we've already seen a few points that have helped to ease some concern. We've seen both spokesmen out of both the U.S. government as well as the Israeli government suggesting they're not finding intelligence that suggests that Iran is involved in these attacks, which again has dialed down some of the tension. I think the second point, you saw Secretary Yellen last night suggesting that if needed, the U.S. might tap the strategic petroleum reserves again, help stabilize oil prices again. That's encouraging. I think we'd also want to see something out of the Saudis, who have obviously meaningful spare capacity, that they would be interested in stabilizing global oil markets as well, should they become a bit more volatile here. If we see those types of things, then we think the spillover effects on markets can be contained.
Indeed. I spoke with Saudi Arabia's energy minister, His Royal Highness Prince Abdulaziz, in Riyadh on Sunday, and I asked him directly, is OPEC ready to act if the situation deteriorates and oil prices continue to spike? And he seemed to indicate that, yes, OPEC is obviously looking at this situation very closely, and Saudi Arabia does have the spare supply capacity to perhaps minimize the risk of an energy price shock. So let's see how the situation unfolds. But Norman, to a broader point, do you think geopolitical tensions and the prospect of higher energy prices could potentially also change the narrative for the US Federal Reserve, now weighing whether or not to hike interest rates yet again this year?
I think the recent rise in oil price, even before this attack, has been something the Federal Reserve has been watching. But underlying that, I think the Fed is very much focused on developments in the job market. And obviously the strong job numbers on Friday have left people concerned that the Fed might have some more work to do going into their next meeting.